from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, tech stocks plunge. Amazon shares having their worst day since 2006. The NASDAQ sinking. We will pinpoint the biggest pain points for big tech going forward. Plus, Elon Musk sells $8.5 billion worth of Tesla shares to pay for Twitter, but he's still got to come up with billions more. Tesla shares are down 24% since he disclosed his Twitter stake, and Twitter shares are trading lower than his offer price. Can Musk make the tricky math add up? And over to Musk's other company, we are watching the Spacex rocket about to take off from Cape Canaveral. It is poised to make history, marking the fastest turnaround time for a refurbished rocket ever. We will bring it all to you live. All of that in a moment, but first let's get a look at the markets. Tough day for tech stocks, extending their losses. Worst monthly drop since the global financial crisis. Our Taylor Riggs with us now to explain. Taylor, what a day.
Yeah, Emily, really hard to put this into perspective. You're looking at the S&P 500 having its worst month since March of 2020. As you mentioned, tech and big tech having the worst month going back since the fall of 2008. If that doesn't start to put some jitters into this market, I don't know what does. I think what is so interesting, I know that you have brilliant sell-side analysts coming up on your program, but there is a big disconnect. I'm taking a look here at a chart of the NASDAQ and the NASDAQ 100, all of those big tech stocks, you're down to about a 13,000 level. But those strategists are still predicting that a year from now, so the forward 12-month average, you're still looking at a NASDAQ 100 that'll still be at about 17,000. So there has been sort of this disconnect in the market. How are we thinking about fundamentals? How are we thinking about consumer sentiment? At least for now, consumer sentiment has been weakening. If you change up the board, I wanted to take a look at some individual stocks here for you. Emily, of course, Apple, it actually wasn't that bad when we think about the quarterly results, but for the month, you're still down about 12%. Amazon, as you mentioned, you're still looking at one of the biggest monthly declines that we haven't seen since about 2006, right? And don't even get me started on that daily number as well. And then, of course, Alphabet as well. Google, those shares, they started to give us some nervousness. You're still off about 20%. So you're thinking about a correction and big bear market territories for some of these individual names as well. Finally, Emily, I know that you're going to be taking a look a lot at Twitter and, of course, Tesla on this program as well. So again, here for the week, of course, since we got the closing and that announcement, of course, of that sort of the take private here of Twitter, those shares, we're going to call that unch on the week. That's not very exciting, not a lot of drama. Tesla, though, you mentioned that share sale off now about 13.5% for the week alone.
All right, Taylor Riggs, thanks. A lot of red there. Meantime, for tech investors, worst start to the year in 2 decades. If you take a look at the bigger picture, as Taylor mentioned, the NASDAQ 100 hammered this year, wiping out more than $1.8 trillion in value in April alone. How much more volatility will the tech sector see? Mark Mahaney of Evercore with us now to discuss. Mark, how much more? How much more are we going to see?
Well, we still have Fed decisions coming up this next week. And then one shoe that has not yet fallen, and Taylor just started to tease this out, is whether the consumer really weakens. Look, everything's been thrown against tech stocks so far, except for a global recession. But we know we've had decades high inflation rates. We got surging interest rates. We've had a war breakout in Europe that has dampened at least some demand so far. Just dampened it. It hasn't crushed it yet. It's dampened it. So, and then you've got supply chain issues out of China, and so it's hit Apple, it's hit Amazon, it's hit Google, Facebook, Microsoft, even all of the major tech stocks. I don't think it abates quickly. It does abate unless we get another shoe to drop with the consumer really falling off a cliff. We haven't seen evidence of that yet. I hope it doesn't happen.
Now, you cover so many big tech companies: Amazon, Alphabet, Meta, Twitter, Netflix. When you look at the broader landscape, what are the most alarming pain points that you see?
Well, I also now want to put this in context. Look, this is the third bear market that you and I have gone through just in the last 5 years. We had one in 18, of course, during COVID, the beginning of COVID, and we have one now. But, we've had, I don't know, I've lived through 7 or 8 of these. So they almost all are fundamentally driven. And there are these confluence of events coming up. I think of all those stocks that you mentioned, probably the one that most fundamentally surprised me was Netflix. That just hit a wall. And I think that was because they just didn't have a plan B or a plan C, at least not ready to go. And they sort of hit a little bit of market maturation and lots of competition. I don't think that's the case, actually, with Facebook or Google or Amazon. I think these are dips that you as a growth investor, me as a growth investor, I want to be buying. I call these DHQs, dislocated high quality opportunities. I know everything's being thrown against Amazon now. I mean, this is about as big of a macro play as you can find. They got 1.6 million employees. So if wage inflation is going up and shipping inflation is going up and fuel inflation is going up, if all that happens, Amazon's definitely negatively impacted. I just don't think this is a structural change in Amazon's business model, and I think they'll start scaling through it. And you want to be buying them when this is about as bad as it gets. And all of the stock's going to work as things get less worse going forwards. And I think they will, barring a global recession.
Is Netflix going to be able to peel itself off the wall and get some momentum back?
Yes, at some point, I'm sure they will be able to. To me, this is like, if you remember, Emily, Priceline, which turned into Booking.com. It was a wonderful stock for a decade, like Netflix was, and then it went ex-premium growth. They stopped growing above 20%, and they just kind of did this 10% revenue growth, and they traded fine in line with the market, but they didn't outperform. And I sort of think the same thing happens here with Netflix. And the challenge with Netflix is it exited, premium growth from a very high multiple. So you had this wicked correction down. Now you've got this thing trading at like 15, 16, 17 times earnings. That's about right for an asset like this. So I think it kind of hugs the market for the foreseeable future. I downgraded the stock earlier this year, and my history tells me you stay on the sidelines on a name like this for at least a year.
Meantime, got to talk about Twitter. Musk trying to sell more shares to get the money he needs to do this deal. Twitter earnings, though, didn't look great. Do you think he's really committed to owning and running a money-losing asset, or does he want to turn this into a profitable business? And can he get the deal done, even as Tesla shares continue to decline?
Well, I think he can get the deal done. I think he's got enough personal wealth that he can get the deal done. It may not be as attractive as he first thought. The second thing is, I don't know whether he really wants to run it as a profitable enterprise. His public statements indicate that he hasn't. That said, this person is an enormously successful entrepreneur. The difference here, however, Emily, is that he didn't build this company from the ground up. He's acquiring an asset. And so then you go through, you do a big M&A deal, you're going to have to figure out cultures. This is a very different business model than he's run before. I know he's extremely intimately knowledgeable about how Twitter works as a user, but there's a side of the business here. The people who pay the bills at Twitter are advertisers, and that's a very different mindset, very different set of skills. And I don't know what Musk wants to do about that. If he doesn't care about the advertisers, they're not going to care about him, and you're going to have ad dollars decline. And by the way, that's your cash flow. So I think the operational challenge here is going to be greater. And I don't know whether that bothers Musk or not, but it's going to, if it's a financial imperative for him to get this is going to be a bigger challenge for him. If he really wants to run the business properly, this is going to be a challenge for him.
And quickly, Twitter shares still trading below his offer price. Do you think investors don't think he can get the deal done?
I think there's always a little bit of a gap in these M&A deals. This deal's not going to probably close for a couple of months. Something could still come up regulatory-wise. So there's always going to be a little bit of a discount. I don't see it as that glaring, the gap here. So, I'm not surprised that there's a gap. I would expect it to narrow as we get closer to whenever this thing is supposed to close. I think the thing's going to close pretty quickly in the next couple of months, though, next month or two.
Interesting. Why quickly?
I don't know what stops it. There's no other bidder here, so it's only regulatory approval. The board has agreed to this. I think the largest shareholders have signed up. I don't know that for a fact, but I'm guessing that that's the last series of events that caused the board to say, okay, deal's done, because they heard from their largest shareholders that they want this deal completed. So there's nothing to really stop it except for the regulatory approval process.
Interesting. Mark Mahaney of Evercore. Always good to have you. Happy Friday, Mark. Thanks for joining us. Coming up, she worked with Twitter to help make the platform safer after she became the target of trolls herself during Gamergate. We're going to get Brianna Wu's thoughts on Elon Musk taking over. Plus, later, fresh off Intel's latest results, my conversation with CEO Pat Gelsinger about inflation, the ongoing chip crisis, and an ongoing war. This is Bloomberg.
We've already invested in the engineering build out. We have better products that are ramping that will give us better margins and better price points for that as our competitive position improves overall. So we're going to make the investments necessary to get us back in the unquestioned leadership.
Elon Musk sold an additional $4.5 billion worth of Tesla stock, according to new regulatory filings. That makes his total sales this week $8.5 billion, bringing him one step closer to making his deal to buy Twitter a reality. Musk has already discussed some of the changes he'd make to Twitter on Twitter, most notably his now pinned tweet about free speech and censorship. There's been some excitement and a lot of concerns about what Twitter might look like under Musk, especially when it comes to changing Twitter's moderation policies. My next guest actually helped Twitter's Trust and Safety Council shape those policies, and I'm joined now by Brianna Wu, Executive Director, Rebellion PAC, one-time congressional candidate, and a woman who unfortunately knows a thing or two about harassment. And Brianna, I just want to remind our viewers that not only did you become a target of vicious trolls on Twitter as a result of Gamergate, your harassers came after you in person and tried to, physically harm you. In the wake of that, you helped Twitter shape its moderation policies. How do you feel about handing that over now to Elon Musk?
Well, I'm obviously very, very concerned. Something I talked about to NBC News this week was kind of the history of Twitter's moderation policies improving in the wake of Gamergate. I talked to Del Harvey and a lot of other people at Twitter from really extensively, from about 2014 until about 2018, trying to basically fix some of the things that went wrong at Twitter. And something I really want to stress to everyone watching you on Bloomberg is ultimately this was a UX problem we were trying to solve, a user experience problem. This was not political. It was not a left versus right screaming match. This was people on Twitter are having a bad user experience and we need to fix it. So I'm really worried that all the progress we made to basically let a lot of people use this service and not get death threats, rape threats, their personal information published. I'm extremely concerned that's going to take a step backwards. And because this is Bloomberg, I think ultimately that's going to really affect Twitter's stock price and their profitability.
If you could give Elon Musk some advice, what would it be?
I think the main thing I would say is listen to the professionals on the trust and safety team. I cannot emphasize to you enough, these are data-driven professionals. They're not ideologues. They sit there and they comb through literally large reams of data every single day, trying to figure out how to make the product better, what the shortcomings are. It's almost like cyber warfare in a sense, where you have trolls poking at the defenses of Twitter's trust and safety policies all day and trying to figure out how to get around it. I would say listen to those professionals. What concerns me is, judging from his tweets, it seems like he's coming in with basically a political crusade that he's trying to bring to the platform, rather than just trying to empower his professionals that are trying to solve this from a non-political point of view.
Now, Elon Musk is inarguably an innovator and has, brought some of the most difficult ideas in history to fruition. Why shouldn't we think he could actually make Twitter better?
Well, if we were talking about making a tech product, I think I would have a lot more faith in him. I think it's also worth saying Elon Musk is also someone that makes really big promises that don't seem to go anywhere. If you listen to him, we're going to have Optimus robots, these fully autonomous robots that can act with artificial intelligence and walk around on two legs. Those will be out, I believe, next year, according to his public statements. He said Tesla will be a fully self-drivable car every single year for the last 6 years. I think there's a real credibility gap when it comes to his very large pronouncements on this. And something else I really want to stress, Emily, ultimately, most of the policies that changed at Twitter happened because the Twitter leadership was invested in it. From 2014 to about 2018, they were very incentivized, not just from users, but from the stock price to address harassment. If you remember, they tried to sell themselves to, I believe it was ABC and Disney at one point, Twitter did, and the deal fell through in part because of the congenital harassment on the platform. So, ultimately, this isn't just a user safety issue, it's a stock price issue.
Now, Jack Dorsey just posted a long Twitter thread taking responsibility for mistakes. He has, talked a little bit about the handling of the New York Post article, mentioning Hunter Biden. But of course, there are many, many other issues that Elon Musk seems to be taking issue with. Jack says a transparent system, both in policy and operations, is the right way to earn trust, whether it's owned by a company or an open protocol doesn't matter, as much as deliberately deciding to be open about every decision and why it was made. It is not easy to do, but it must happen. What do you think he means by that? And is it really possible?
I don't know how possible it is, but I think it's a good ideal to strive for. I think a lot of the misconceptions about the trust and safety policy happen because there is this veil between what happens on that team and the public. I find it very notable in my work with them. I was really encouraged to not speak about it ever. I only spoke about it this week because I felt the stakes were so high and that it was, worth kind of talking about my experiences on that team because of this misconception that, it's a bunch of Democratic people behind the scenes trying to silence conservatives. Absolutely not my experience at all. I think that if we had these policies applied more transparently, I think that would be good for getting the trust of all users. What I find is so interesting, Emily, is from my perception, if you look at Twitter and their ability to address things that we all agree should not be on that platform, things like death threat and rape threats, I think they do a much better job than many of their competitors. They certainly do better than Facebook and Reddit, but they've never really gotten the public credit, I feel, that they deserve for that. I think that being more open with that would definitely help it.
I would say in my own experience as a user, Twitter's moderation has gotten better, at least from my perspective and the tweets that I personally see. I think the folks who are really excited about Elon's vision seem to think that Twitter has made a lot of political decisions over the last several years. Even Jack himself says, he generally isn't a fan of banning someone, and Twitter is the platform that banned President Trump permanently. Do you think the decisions that Twitter has made are political or were politicized?
When I come on your show, I try not to make things partisan, but since you asked, I'll tell you my honest impression. In Gamergate, I felt that these policies were the alt-right versus normal people, right? It was the trolls versus just professionals trying to get their job done. I think, unfortunately, since 2016, we have seen these issues become partisan as some people are kind of becoming their worst selves online. So I think, unfortunately, this has become another left versus right screaming match. I can't think of any problem in America that's gotten better when it's become a partisan screaming match rather than a problem to solve.
Brianna Wu, Rebellion PAC Executive Director, longtime crusader for better moderation policies. Thank you, Brianna. Coming up, despite beating earnings estimates yesterday, Apple down today after warning the company could lose billions due to supply issues. We'll have more on that next. This is Bloomberg. Apple warning it could lose billions this quarter due to supply shortages specifically tied to China and its strict lockdown policy. I'm joined now by Bloomberg's Mark Gurman, who, of course, covers all things Apple for us. So, Mark, just exactly how bad did Apple say these supply chain issues are going to get? And is it all because of COVID in China?
Well, pretty bad, right? They're guiding between $4 billion and $8 billion. And if you listen to the call, it seemed like Tim Cook and Luke Maestri, the CFO, they really weren't sure how big of an impact it really would be, right? That's why they gave that big 4 to 8 billion range. Now, they've been giving these ranges of supply chain impact now for a few quarters, but this up to $8 billion marker, that's the biggest one. Now, analysts still think that Apple could beat in terms of year over year, right? But we'll see how ultimately Apple shakes out. I think it's a combination of the supply chain in China, which definitely has a long way to go in terms of the overall strategy. Final assembly there is obviously a bottleneck in recent years. I'm sure we'll get more into that. I also think it has to do with global economic conditions, the war in Ukraine, inflation, people trying to hold on to their money, and also in terms of, products in some sense, right? Like people are anticipating big iPhone 14, big iPad and Apple Watch changes later in the year, as Apple always does, so people could be holding on to that too as well. Q3 is traditionally one of Apple's more soft quarters.
How do you think investors are going to handle this, given that, Apple's earnings generally were pretty good? If you look at how dismally bad the results have been from other tech companies like Amazon.
Yeah, I think investors are probably going to wait to really, make their long-term decisions on Apple until the Q3 results, right? I think they want to see how things shake out. Tim Cook and Luca, they were vague enough to indicate, maybe it won't be 8 billion, maybe it'll be less than 4 billion, right? That's why they gave that big range. They didn't really seem sure. So if Apple's not entirely sure, I'm not sure investors and analysts can be entirely sure too. So I think they're going to wait until late July to see how things really shake out. Obviously, there is a lot of reason to be optimistic about Apple, but an $8 billion hit, yet again, on the supply chain indicates that Apple really needs to be making some tweaks to that overall strategy there. And Tim Cook, the architect of the Apple supply chain over the last 20 years and change, he was, again, defensive about the supply chain strategy. And so we'll see, if Apple does make those changes that they clearly need to make.
And what are the products that you are most excited about coming year, September, quickly?
Yeah, I'm particularly excited about the Apple Watch, right? I think there's going to be 3 new models this year, including a new ruggedized model, maybe with some satellite connectivity features. So that'll be pretty nifty, a new iPad Pro, and also the AR headset at some point.
All right. Mark Gurman, who, of course, covers Apple for us, will be on the lookout for all of those things. And now we are about a minute and a half to launch of that Spacex Falcon 9 rocket carrying 53 Starlink satellites. We're looking at a live look there of Cape Canaveral Space Force Station in Florida, taking off as planned at this point at 5:27 p.m. Eastern Time. I want to bring in Bloomberg's Justin Bachman, who covers the space industry for us. This would be a history-making mission, Justin, correct, in that this would be the fastest turnaround time for a refurbished rocket ever?
That's true. Yeah, they have shaved their previous record of 27 days down to 21 days. So it is a record. When you put it like that, it sounds pretty monumental. What's curious is we don't know what their target is. It's interesting to see if this becomes more of a 2-week or even a 1-week turnaround for when they land these rockets and they're ready to fly them again. And I think they're learning. It's one of those open questions. How many times can a Falcon 9 fly, and how quickly can you get the refurbishment? How much do you need to do versus what you can avoid?
All right, Justin, here we go. 5 seconds to go.
3, 2, 1, ignition. Lift off for Starlink. Go Falcon. Go Starlink 416. Vehicle is pitching downrange. MOD chamber pressure is nominal.
Falcon 9 has successfully lifted off from Space Launch Complex 40, carrying our 53 Starlink satellites. Now, although at liftoff gravity is pulling the vehicle straight down.
All right, the rocket is on its way. 27 days after its last trip. This is the 6th flight ever for this particular rocket, now carrying 53 satellites, Starlink satellites, into orbit. Our Justin Bachman, who covers the space industry for us, Now, Justin, how significant is this milestone?
I think it's fairly significant because you're seeing SpaceX learning. They fly a lot and they learn a lot. And one of the questions that the company has got to be, what is the minimal amount that's required to have a safe flight for not only our payloads but for customer payloads? And the faster you can do that, it lowers costs. And this is really a business more than a novelty. And when you make it a business, you're always looking to lower costs. And this is an important part of it. How quickly can you refurbish it? What's the minimum? How quickly can you fly? And today they're taking a payload that's going to contribute to their constellation, and that's more money. So it's a business that works, and I think we're seeing a lot of on the cost side with these kind of refurbishments.
So we're about 30 seconds away from the first stage main engine getting cut off here. And I'd like to talk a little bit about how this fits into the bigger mission of Elon Musk and SpaceX. The goal is to have these taken off as frequently as airplanes take off on Earth. Can you paint the picture for us, Justin, of what this future space economy will look like?
Yeah, you're talking about an era not too many years into the future, if you believe a lot of the ambitious proposals and optimists, where you do have rockets that take off as frequently as airplanes, because there is a burgeoning commercial industrial base where people are not only living, and space tourism is a small part of it, but you have companies that are actively manufacturing and doing other things with microgravity. And using, a hard vacuum of space is a very useful tool in a lot of research. So you have this economy where you have a lot of things going to and from space, mostly high-end, high-value products and services where, they're using the environment for specific reasons. And, pharmaceuticals and tissue organ growth is one area that we've heard a lot about. So that's what, frequent launches are. And the Falcon 9 itself is going to be retired, not too many years in the future, where, if their Starship machine works as intended, that's going to take over. And that's a much larger rocket, much more reusable even than this one. And so you're going to see other companies enter that space as well. And it's going to be a market where you have frequent launches, and we probably won't talk about each one as a novelty because it becomes so routine. And I think that's the goal. Nobody is there yet, and it's not exactly at hand, but I think that you're seeing SpaceX build the blocks where that does become the ultimate destination.
Justin, stay with us. I want to bring Lisa Rich in, the co-founder and COO of Explore. This is a company that provides space as a service by hosting payloads in Earth orbit and beyond. Lisa, this rocket flew just 21 days ago, so that timeline is getting tighter and tighter and tighter. What exactly does this signify in terms of what SpaceX and the team there has accomplished?
Thank you, Emily. What we're seeing is what Justin was referring to is this becoming the business of space, that we are able to launch frequently, and this becomes an enabler for commercial space companies to be flying payloads. We're not only flying other people's payloads at our company, but we're flying our own sensors that allow us to provide data and bring that data back from space that enables companies like the oil and gas industry, insurance industries, logistics industries that can help us with supply chain issues or, issues with even disaster responsiveness. So all of this, we watch the launches and it's exciting to see the launch, but we'd love to tell the story of, the high capability of what's flying and what that means back here on Earth.
53 satellites going into orbit today, and thank you for explaining just how important these satellites are. You look up in the sky on any given night and you see them, and I wonder, are we getting concerned that it's getting a little crowded up there? Are there, once the space economy becomes more rich, are there concerns about crashes and traffic going forward?
Well, I'm glad you bring that up because space traffic management is an important part of the process. And we're going to be getting better at this by improving our regulatory process. So improving the regulatory process actually makes us more competitive. And we have folks working very hard to make this have more ease of use, right? Right now, when a company flies a spacecraft or satellite, as we call these satellites, you hear if there's a conjunction event or a possible collision event, you're notified of that. But the company itself isn't necessarily able to track it. They're going to be notified. So in the future, we're going to have that process, I think, opening up a little more for awareness that allows us to avoid these potential collisions. But is it a danger now or 5 years from now? I'm not so sure it will be because our systems are all improving and the technology and awareness of where satellites are is improving all the time. So space is a big place. There's a lot of space in space. So I don't find that a concern, and I don't think a lot of satellite operators do necessarily today.
So we just saw the entry burn process there that is now shut down and complete. First stage landing burn will start at about 8 minutes. So we're 30 seconds away from that. Justin, so far everything seems to be going as planned. Walk us through the rest of this mission, given the point we're at right now.
Yeah, it does seem to be going to plan. So what you'll see coming up next is, as you mentioned, is the landing burn, where this needs to slow down. It is still supersonic vehicle at this point, and it needs to shed a lot of speed still. And to do that, it's going to fire a rocket engine again, vertically coming down, and then after that you have the landing burn. Complete where we've seen it. But that, that's a crucial part of it, and you're seeing that start right there.
First stage landing burn happening now. At this point, what are the things that could? There it is. There it is, coming back down. At what point do we consider this a success?
I think it's a success when they get their satellites deployed and going where they want to. And, this booster is going to fly another day, maybe soon.
All right. The goal, I would guess, is sooner than 21 days, because that's how long this booster took to turn around. Lisa, just how quickly do you think turnaround can get if SpaceX does its job right?
Yeah, I think that they probably can keep shaving time off because that is what they do. They're looking for all of these incremental ways to keep lowering the turnaround time and increasing the usage and the reusability. So for this to have been 6 times to fly, that's phenomenal. They have the same mindset as my company Explore, where we're looking at, low cost and high capability. And they're proving this out every day by showing us that they can turn around in 21 days. I visited these. They're extraordinary to see up front. The manufacturing capability and refurbishment now. They're working like clockwork, and I love to see that. It just opens up the doors for commercial.
Those satellites will be deployed about an hour into the flight. Justin, what's next for the SpaceX team now that this booster is back on Earth?
They'll be looking for another Starlink launch in short order. I think maybe next week, if I recall correctly. But more to build out that constellation and add new customers. They just added their first 2 airline customers in the past week with an airline called JSX and Hawaiian Airlines. So they're moving into aviation. They want to get into cargo ships and other maritime applications. So you're seeing Starlink become more of a non-residential, but also a commercial business product as well.
All right, well, we'll be watching for those satellites to successfully deploy, but so far looks like a rave success for this latest SpaceX mission. Justin Bachman for Bloomberg, Lisa Rich, co-founder and COO of Explore. Thank you both for helping us narrate that journey. Coming up, Intel's business outlook after a disappointing second quarter forecast and how the company intends to get back on top. My interview with CEO Pat Gelsinger up next. This is Bloomberg.
So overall, it's going to be a very competitive market. And the build out of our manufacturing capacity, I've sort of said, Emily, that we didn't lose market share, we gave it away.
There's been growing concern that pandemic-fueled demand for PCs is sputtering. Intel underscoring that, coming out with a disappointing second quarter forecast. I spoke with Intel CEO Pat Gelsinger earlier and asked him why. Despite this, he's still optimistic about the second half of the year. Take a listen.
We see continued strength and growth in our data center business. Our network and edge business, very strong first quarter, and we just see that growing throughout the year. We also have our new growth businesses in accelerated computing and graphics, the new area of foundry and Mobileye. All of those had very good quarters, and we forecast growth, very strong growth for all of those as we go into the second half. And in the PC business, after the inventory correction is done, we expect in Q2, we expect a stronger second half. We have a lot of visibility into where our OEM inventory levels is. And we're also seeing that the strength of our product line, our Alder Lake products, ramping ahead of schedule. You know, the Raptor Lake products already being broadly sampled into the industry. And, you know, the second half of the year will be highlighted by a commercial refresh. You know, we're way overdue on the commercial segment for a refresh. And, you know, with people coming back into the workplace, we see very strong outlook for the commercial portion where our market share and our pricing is stronger. So overall, we're very confident, reaffirm the second half of the year and the overall numbers. So we're feeling very good about the business and the execution in Q1 with a modest beat. Despite all the turbulence, just reinforces our confidence that the execution machine at Intel is rebuilding, and we have confidence in the rest of the year.
Now, I spoke to Apple CEO Tim Cook yesterday, who said, you know, they're still seeing supply issues, and they're really almost exclusively related to chips that impacted several of their products. They also said on the call that supply issues could dent sales as much as $8 billion, in part due to these continuing COVID lockdowns in China. You said the shortage will last longer than even you thought. How much longer, and what more color can you give us?
Yeah, and I think there's two different questions there, Emily. One is some of these near-term lockdowns, and we're starting to see the port open up. We're getting some positive news there from China in that regard, which is, you know, particularly challenging for all of like the PC OEMs and Apple. A lot of business going through there, and a fair amount of our business as well. Overall, though, the big story is around building up the semiconductor capacity. And we had felt like 23, we'd start to see that equilibrium. Now, in no small part because of some of the equipment shortages, the equipment that goes into the fabs that we're building, we're seeing those lead times push out substantially. And as a result, we expect the overall semiconductor shortage to not be resolved until 2024 now, as some of those capacities come online.
Now, I know you're still bullish on the PC market, and I'm so curious what makes you think it's going to remain strong as we come out of the pandemic, given that we're facing inflation and ongoing war, rising gas prices, and more pressure on consumers than we've seen in a really long time.
Yeah, I think there's a variety of things there. And the range of the PC market outlooks was pretty wide, and now it's quite narrow. All of the analysts, all of the OEMs, and I think you know, Satya reaffirmed this on his on the Microsoft earnings call this week. It's a structurally larger market now. And refresh rates, you know, the essential role that it plays in work, learn, and play. We just see the PC market as a larger market. And as I've already emphasized, we're way overdue on a commercial refresh, Windows 11, key new products like Alder Lake and Raptor Lake from Intel. And I'd say that 350 million-ish, about 1 million PCs a day. Everybody's in a pretty tight range around that. And I'd say finally, we just have better visibility. We know our product builds, many of the other components like Wi-Fi, Bluetooth are made by Intel. You know, now our position in graphics is very strong as well. So all of these taken together, we have great insight into what that looks like. Great alignment with our customers, our OEMs, as well as the other ecosystem partners. So we feel very good that it's, you know, about flat market year on year. And we're confident that we're going to be able to execute, gain share in that market as we did the last quarters of last year. So overall, we feel good about our business outlook there.
Intel CEO Pat Gelsinger there. And it is the light at the end of the tunnel for employees gagged by non-disclosure agreements. Salesforce will let its employees break NDAs so they can report workplace violations going forward in the future. Talking about harassment and discrimination, big potential step forward. Also coming up, former Twitter COO and CFO Ali Rogani will be joining us. Looking forward to hearing his opinion on the Musk Twitter deal next. Monday, Twitter officially accepted Elon Musk's offer to buy the company, and it's been a long week since, as users, business leaders, and politicians alike have debated the pros and the cons. My next guest has a very special understanding of the company. Ali Rogani is currently the managing director and CEO of the Y Combinator Continuity Fund, and joins us now, the former COO and CFO at Twitter. So, Ali, I'm so curious, as a former executive, what your read on this is.
Well, it's quite the spectacle. I mean, the world's richest man swooping in out of nowhere and taking Twitter private, $44 billion, just the speed of the transaction, the ambition, and the scale. I think it caught a lot of people off guard. I think it's it will be an interesting open question where he takes the platform from here. I think a lot of folks that have experience at Twitter find some of his public pronouncements about, hey, I just want to make the platform, stand for more free speech. I think a lot of us find it a little bit naive in terms of what he said, and it doesn't reflect kind of the complexity of the issue. And I would even argue it's not the main issue facing Twitter. Moderation isn't. I think the main issue Twitter, I think the main issue facing Twitter in light of Facebook and Instagram and Snapchat and TikTok and so on, how does the platform continue to grow and be increasingly relevant? You know, the platform punches above its weight, meaning above its size, because of the prominent users that it has and because it's public and it's really a media property, I think, partially. But, it hasn't really grown robustly for several years. And I think in the maturing social media landscape, that's actually the biggest problem. I think that the risk that Twitter faces, it just becomes so much smaller than some of the other platforms that it gradually loses its relevance. And I think the growth problem is the primary problem for Elon to solve.
Roger McNamee, longtime tech investor, came on saying something similar. I want you to take a quick listen to what he had to say.
Twitter has never successfully monetized itself. The company, I believe, still has a huge net loss cumulatively since it was started. And given its influence with politicians, celebrities, and journalists, Twitter should have been able to find a path to much greater profitability than it's had. It's so influential.
Ali, why don't you think that has happened? And obviously, I know that in those earlier days, you tried to make that happen.
Well, I mean, look, Twitter is as an advertising business, it is at quite some scale. I think it lacks certain characteristics that Facebook has that make it, that lend itself to being a better monetization platform, namely Facebook's insistence on gathering a huge amount of data on its users that's useful to advertisers, all the tracking they do off the site, and their insistence on real identity, none of which Twitter does. And so as an advertising platform relative to the things that Facebook does, it never quite had as much power. And as I said before, I think the fact that the platform isn't growing robustly relative to the growth that Snapchat, Instagram, Twitter, among others have seen, means that it's a less exciting place for advertisers to be, and a place that really can't drive the kind of growth in advertising revenue that some of these other platforms have driven. Having said that, it's a fairly significant, in the billions of dollars of advertising revenue scale business. So it's not a small company. And if the priority were to drive Twitter to profitability, like Roger maybe indicates should be, I'm sure there's a way to do that by just shrinking the size of the company. I just think that the various people who've run the company have always been motivated by a bigger ambition and have hence, invested in growing the size of the company, and, for right or wrong.
What do you think the chances are that Elon Musk can unlock that potential?
It's a fascinating question, like how much he even cares about near-term profitability. I mean, certainly if he can find, he's really accountable to no one. He's taking the company private. He has unlimited personal resources. And he certainly hasn't talked about Twitter as a business very much. He's talked about Twitter as a social platform. He's talked about the importance of freedom of speech. Twitter is a global.
He's talked about subscription potentially as an avenue.
Yep. So, I don't know. I think I'm sort of interested to see what he does too. But, my read of it is the sort of business of Twitter probably isn't his number one priority in the near term. I could be wrong, but just judging, from some of the comments that he's made, he seems to be more interested in a more transparent, a more free platform, making certain things open source and, kind of all these ideas that he's sort of mentioned. And this is a very unique situation because, with the world's richest man buying this platform, he can kind of do whatever he wants, at least for a period of time. And I don't think he's beholden the way a financial investor or a private equity investor would be to, near-term metrics or near-term profitability. So I think it's a fascinating question to see what he does.
A minute left, Ollie. Any advice for Elon Musk?
I think the advice I would give is the advice he probably would have a very hard time taking. Look, I don't think some of the tweets he's made recently about criticizing some of the employees of the company, and I think he has a different responsibility now as the owner of Twitter in terms of how he behaves on the platform itself. And it's clearly fun for him, or he gets some value out of the off-color kind of things he does and says, like, ridiculing Bill Gates or whatever it might be. I just don't think that helps him now as the owner of Twitter. I don't think it helps him with employees. I don't think it helps him with prospective employees. And I don't think it helps the platform itself. So I would say, let's just stick to business and try to take this platform to where really it should be in terms of its importance in the world.
All right. Ollie Rogani, former Twitter CFO and COO. Appreciate you sharing that with us here today.
My pleasure. Good to see you.
That does it for this edition of Bloomberg Technology. Wall Street Week coming up next. They're going to talk to Larry Summers. He's got some thoughts on the Elon deal. And don't forget to check out our podcast. You can find it daily anywhere you get your podcasts. Happy Friday, everyone. Have a wonderful weekend. I'm Emily Chang in San Francisco. This is Bloomberg.